Hey everyone, if you are a beginner trader and you feel overwhelmed, this video is for you. I'm going to break down a simple strategy using fair value gaps and key zones, something you can actually follow without overcomplicating trading. A lot of beginners lose because they're trying to learn everything at once. But trading really comes down to understanding where price wants to go and where it's likely to react. It is going to be a little bit biased because I love US30 and I love gold, but I'm going to show you an example of what fair value is, slash what a fair value gap is on US30. So it's a lot easier to see it once your eyes do get used to it, but a fair value gap is simply where there's price movements, right? Price is going up or down drastically with no wicks in between it. So, for example, if we go to the 4 hour chart, you'll see it more prominently. And I'm just going to have it on the chart for you guys. This is one of the indicators that I love using. This indicator is Lux Algo Fair Value Gap. These are the settings that I use for this indicator. So feel free to use that. But basically, what a fair value gap is basically just imagine price just shooting up in one direction. It leaves something called an imbalance. So imbalance means that the market isn't fully balanced out in an area. So price will eventually come back to that area and fill it in. Hence the word imbalance. These places in the market usually get rebalanced. And if you're not sure about what imbalances are as well, and if it's still confusing, definitely go back to the videos that I have posted on my channel as well. I literally have a video titled Imbalances. Feel free to watch it and go over it as many times as you want to until it clicks. Fair value is simply where price is considered balanced, right? So if price comes back to 50% of this imbalance, it would be considered balanced. On the contrary, the market doesn't have to fill the full imbalance to be balanced in the market. So these entries would be where I pay attention for potential setups, right? So can we get the market to potentially come back into that 4 hour fair value gap, right? Which we did right here at 10 a.m. So 10 a.m. would have been a potential good entry point for the market to enter for buys, right? As you can see right here, this was 10 a.m. So kind of a little bit for buys, and then it ended up being like a huge sell-off. So that's something to keep in mind as well. But that's a fair value gap. So what you want to do is you want to basically wait for price to return to these areas and potentially see if price could drop from there. So you guys aren't going to be able to see it, and I don't think it's going to highlight the fair value gap. But right here, there was a fair value gap right here. Boom, boom. So it's basically a price where there's no, just think of it as there being space in between those candles, right? So right here, boom, up until about right here is where there's a fair value gap. We did kind of sweep through it. The market might come back and come down again, but obviously it's 4 o'clock, it's 4:28. So we'll see what happens when the market does reopen. But that's about that. Next, we're going to go over liquidity slash zones slash liquidity. So as you can see on the chart, right, these white lines are just zones. They're areas that price has come to on the higher time frames, and they're areas that price could come back to and kind of bounce off of and play off of. So that's why I call them zones. So with these zones, right? And when you think liquidity, think market highs, session lows. So for example, gold was at 2,600. This is just an example. Gold was at 2,600 at 9 a.m. Odds are at the end of the day or whenever is necessary, she's going to come back to that market high or market low. Okay, moving right along. So what you want to do is you want to wait for a liquidity sweep, right? So as you can see right here, you're going to wait until 9:30 to enter your positions. 9:30, sorry, after 9:30. So 9:30 is New York Open, which many of you know. Hopefully, New York Open is 9:30 for stocks and indices, right? So I would personally be waiting until I could get a sweep of liquidity. So what do we do here? people thought that it was a good time to sell US30 right here. And they were right, but the market would have taken you out of that trade first and then pushed down in your favor afterwards. So you want to spot out and be like, okay, where was the high for London? Boom. This is the high for London. Okay, let me wait and see if we can sweep that high first, and then we can get a reversal after. So you want a liquidity sweep before you take your entries for your trades, because price will usually come here and sweep these directions slash areas before the market goes in the actual direction that it wanted to go in the first place. So I will usually mark these highs or lows. Like I'll mark this right here, and then I'll write beside it and I'll be like London high. Or if it's New York high, I'd write New York high, and then I'd leave it there on the chart just so I know, like, hey, if this gets rated, we could possibly see the market come back, retest it. Sorry, the market sweep it, and then possibly create a fair value gap and push down. Maybe even create an order block, which we did end up doing. So the order block is around right here. And we did create it, and then we came back and we pushed down under it. Now, let's put it all together. So here is the full strategy. You need to, one, identify a fair value gap. So as you can see, we had a fair value gap right here. Boom. You want to identify a fair value gap. You want to mark any gaps. So this one is right here, pushed all the way down, then we filled it a little bit. So the fair value gap, you can mark like this. You could also use the indicator, as I said earlier, right? You could use the indicator if you want. So there you are. That is the fair value gap, right? So what you could do as well is you could use this indicator, this fair value gap one, just to see where the fair value gaps are when they do pop up. And then you could mark them on the chart, okay? Next, after you've done that, you're gonna want to find a liquidity zone. So this was the liquidity zone that we have right here, boom. Then you want the liquidity to be swept and you want price to come into your area, right? So anywhere within this zone, I could have been looking for shorts. I'm like, okay, this is my fair value gap. Can price pull back into it? And then just to be really, really simple, right? We already swept liquidity. We know right off the bat that if we come back past the liquidity sweep, the market is just going to take me out of my position. And that's fine. Let it hit my stop loss. I could care less, respectfully, okay? So with this particular trade, right, what I would do is this. I would put my stop loss a bit above where the liquidity is. So in this point, it's about 50 points for my stop loss. You could also tighten it a bit if you wanted to, but if you just want to be on the less riskier side, right, I would do stop loss inside the fair value gap, maybe something like that. Because once it comes past the fair value gap, you already know that you're wrong and that the market is most likely going to reverse. So that's that. And then after that, you're simply just waiting and taking the trade zone to zone, right? So right here, your next particular zone would have been right here at 10:30 a.m. Boom. And you would have gotten out of that trade with a risk to reward of a 1 to 3.56, meaning if I risked $1, for every dollar I risk, I will make $3.56, right? So yeah. And on the contrary, I would lose $1 if I was wrong. But other than that, you want your stop loss beyond the zone, which is right here. And you could have also taken it down here, which if you did, it would have been a 1 to 5.39 risk to reward. So that would have been pretty clutch as well. So 1 to 5, I risked $1, I made $5.39, and so on and so forth. If the trade doesn't end up going your way, / goes above your stop loss, that's fine. All that means is that you were wrong, / the trade was invalid, and that is okay. And that's going to be it for this video. The goal is not to win every trade. It's to take high quality setups and stay consistent. If you keep it simple and stay patient, you're already ahead of most traders. And if you do want to see me apply this in real time, feel free to check out my TikTok, where I'm going to be taking $50 to $500, and I did it already in the past, so definitely feel free to check that out. Link in my description box. And I will see you guys in the next video. Peace.